Hi, good afternoon, everybody, or good evening, everybody in KL, and good morning, anybody joining us from London. I'm Mark von Grundher, Director of Benham and Reeves, and thank you so much for all of you attending. We were just waiting. We wanted to start a bit late and just wait for a few late attendees, but we're here now, and we're gonna kick off. And I'm based in London, where the property market is on course for its busiest year since the financial crisis. More than 1.5 million homes are expected to change hands this year. That's a staggering 45% more than in 2020. But more of that in a minute when I go through with my slides. I'm joined today by our country head, Melvin Coe, from our Malaysia office. I'm going to start by giving an update on the London market, both the sales and the lettings market, and look at the fundamentals of why London works, or if it indeed does still work. And then Melvin's going to run through an update on the difference between London and Malaysia, and then focus on a really exciting project we've got called Millbrook Park. And then once Melvin's finished at the end, we're going to both hold a Q&A session to answer any of your questions. So please feel free to ask as many as you like. Obviously, we'll try and get round to as many as we can. Obviously, that's property related, and we'll do our best to answer them. As I said, please do though use the Q&A function or at the bottom of your Zoom page. So, as I said just now, you know, the UK property market is red hot at the moment, which is all down to a few factors. Firstly, there were the stimulus measures announced in the last budget, including the extension of the stamp duty holiday. Government backed 95% mortgages. You know, they've been both key in boosting confidence in the housing market. It's estimated that the stamp duty holiday saved buyers and cost the HMRC £6.1 billion. And that's with around 1 million households benefiting from that tax saving. And that's created an almost gold rush, like frenzy in the housing market. Secondly, record low interest rates have supported buyers' affordability and investors' affordability. And finally, of course, there's COVID, which meant for the last 18 months, millions of people spent most of their time at home. And as things relaxed, there was a huge pent-up demand with a general desire for lifestyle improvement, lifestyle living, meaning that finding the perfect home became a top priority. According to Rightmove, the average price of a property for sale has hit an all-time high, with competition amongst potential buyers looking to secure their next property more than double what it was in 2019, before we'd even heard of COVID. There's especially strong demand for properties with outside space. As you'd imagine, if you're cooped up at home, you want to be able to get outside. And, you know, properties with an extra room that can be used as an office, with the whole working from home movement. And we expect the market to remain buoyant for the rest of this year and run into 2022, with absolutely no sign of any drop in demand following the end of the stamp duty holiday, which only happened last month. And we've seen only increased demand. According to Zoopla, which is another major portal, the housing market is moving at its fastest pace in 5 years, with sales agreed in less than 30 days on average. Demand is 35% higher than the average for the past 5 years. And it's important to note the uptick in buyers in the London area, with demand rising by 14% during the last month alone, as people clearly slowly return to their offices. Meanwhile, the Halifax, which is one of the UK's biggest mortgage lenders like Maybank, they're reporting that UK house prices have posted their biggest monthly rise since 2007. That's up 7.4% compared with last September. The driving factor now is the chronic imbalance between supply and demand, coupled with record low interest rates. and super low unemployment, leading to strong wage growth coupled with savings built up during lockdown. This is all exerting an upward pressure on prices. And finally, according to the Office of National Statistics, the ONS, UK average house prices increased by 13.2% for the year ending June 2021. And that's up from 9.8% in May 2021. This is the highest annual growth rate that the UK has seen since 2004. The London market is headed for continued growth with a strong demand both domestically and from international buyers. Restrictions on travel and the resulting reduction in international buyer demand had a far greater impact on London compared to the rest of the UK. And so therefore, as travel reopens and we get back to normality and international buyers return, the floodgates are going to open and London property prices will see price rises. And that's further strengthened by domestic demand, as I mentioned, as people return to the workplace and they look to buy again in London. A continuing trend is the growth in demand in zones 3 and zones 4, areas like Mill Hill that we'll be discussing later, where we're seeing very strong interest from young families and professionals seeking better value for money. Even with working from home, most people are now going into the office for a few days a week. And so transport links are very relevant. Buyers are looking for relatively affordable homes, good connectivity, near good schools, and with plenty of green space. All of which, if you're an investor, you need to take into account when you're making a purchase. Meanwhile, looking at the rental market, demand for rental properties in London has soared. Rental prices throughout London's postcodes have recorded their strongest growth for the last quarter in more than 10 years. The reversal of working from home, that trend, coupled with the return of overseas students, corporate relocation, and the resumption of international travel are currently driving a real London rental resurgence. We're expecting unprecedented rental demand across the board for properties of literally all sizes and in all locations. You know, you believe that the majority of properties are renting within 48 hours of being furnished. And our sister company, Install Direct, has been inundated and under great pressure with a big jump in furnishing and decorating jobs. International students are once again a driving force, and we've seen a dramatic increase in numbers with inquiry levels exceptionally strong. You know, we're looking at numbers of inquiries up 300% on the same quarter last year. You know, and international students, they tend to have good budgets to secure a property, and because of the shortages of stock, most tenants don't even bother negotiating on the rent now, and they pay the full asking rent. Of course, as long as it's in line with market conditions, you can't just ask any rent and people will pay it. It has to be fair. But if it is fair, tenants are paying it. And in some cases, we're actually now seeing gazumping returning, which means tenants are bidding against each other and trying to outdo them to get a property on the market. In fact, recently we had a couple of students who were arriving. One was from Hong Kong and one was from the Middle East. We couldn't find anything for them, neither could they. And even though their course started at the beginning of October, they actually don't move into their rental property until the middle of November. They waited 6 weeks in order to move into their long-term home. That just should show you what the demand is like. You know, for those tenants looking to renew, we're seeing above inflation increases in rent. You know, this is traditionally the busiest peak season for lettings. But with the additional pent-up demand that I've talked about, we've never had so many inquiries. So now really is the best time to put a property on the rental market. There's no doubt, however, that lockdown forced tenants to reevaluate where they want to live. Proximity to green space became as important as nearby transport. High-speed internet, that's still the top priority for our tenants on their wish list. And we think these trends for outside space and obviously closeness to transport and high-speed internet are going to feature for the long term. And as an investor, you need to bear these in mind. But even though the London market is red hot right now, it's vital to bear some things in mind to avoid any pitfalls. And my 3 tips to successful investment are meticulous planning. So do your research, on the ground knowledge, look at what's going on in the local market and work with a trusted partner, and that's frankly where we come in. With our 60 years experience in the London market, 18 branches in London, plus dedicated Japan and China desks looking after employees from both those places, and they bring in a lot of employees. And internationally, we have branches in KL, as I mentioned, Melvin's our country head, China and Shanghai, KL, Singapore, Dubai, and India. Our focus as a business is on our clients and ensuring we help with everything clients need by offering a complete one-stop service, because when you're thousands of miles away, you need somebody to help you through the process and handle everything for you so you don't have to worry about what's going on. And that starts with investment advice, what to buy and where to buy. Before you exchange, speak to us and let us tell you what the good points, what rent you're really likely to get. We help with furnishing and snagging, as I said, to make sure the apartment is completed as it should be and looks absolutely amazing. Even though the rental market is strong, you still want your apartment to look great and rent the quickest. We then do lettings, and that's finding the tenant, referencing the tenant, and making sure they pay the rent, collecting the rent. Property management and maintenance. The tenants don't need to call you, they call us, and we deal with any problems, including paying the service charge to the freeholder and inspecting to make sure the property is being looked after. And then finally, we even offer a comprehensive tax service. So that means we handle tax returns for overseas investors. And that doesn't matter whether you have any tax to pay or you don't have tax to pay. As a owner of a UK property, you still have to do a tax return, and we can help you with that. And everything that I've talked about, we do in-house. We tried very hard not to subcontract anything at all, so we never get let down. So you don't ever have to be let down. We don't have to let our clients or our tenants down. But quickly, let's not lose sight of what really matters here. London has proved time after time that it's an extremely resilient city. It's an international hub for business. The city's strong economy, thriving business outlook, and incredibly prosperous jobs market are among the reasons people choose to buy, live, and work in London. London property is really a bulletproof investment. It's always been the safe haven and for long considered one of the world's most trusted assets. With its ability to deliver a regular income with yields of anywhere from 3 to over 5% and long-term capital growth, especially during times of wider uncertainty, as we've seen over the last 18 months. And this is a place where people want to invest their money in a stable asset with low volatility. And it's been happening the whole way through COVID, where people have continued to buy. But it's still important to target your investment, apart from the price and the location. As an investor, you need to consider your yield. What rental are you going to get? Is it going to cover all your bills? Are you going to have to top up? And will that affect what your mortgage, what your loan to value should be? You know, you need to consider the potential for capital growth. Is it in a regeneration area? Is it in a very prime location? You know, is it close to a university? And you need to also consider the reputation and track record of the developer. And that leads me very nicely to our development in focus today that really ticks all these boxes. Millbrook Park, it's in Mill Hill. And as I said, Melvin's going to do a full run through of it. But it's built by the UK's largest house builder. In Mill Hill, a very good North London suburb, very secure and safe and great transport links. And we're seeing really robust rental demand for this site. We've had quite a lot of completions already, and everything rents in literally days. We had one of the rentals we had an offer within an hour of when we put it on the market. You know, it's very popular because of the proximity to schools, excellent transport links, and it's popular with all types of people. That's from professionals, students, and even young families. And more importantly, Benham and Reeves are exclusively offering investors in Millbrook Park a 2-year rental guarantee. This really is the perfect solution for first-time buyers and people who don't have the time to worry about it, because we as a company guarantee that rent at 5% of the purchase price for a full 2-year period. And that's paid from the day you complete. It doesn't matter when we let the flat, that's my problem, or the actual rent we achieve, we're still going to pay you the 5%. And we even throw in a free interior design furnishing pack to make the flat look amazing. And once the rental guarantee ends, you're going to have an asset that you love and that will continue to rent very well. So, you know, the whole thing means you earn income straight away. So that's the end of my talk. And with that in mind, I'm going to hand over to my colleague Melvin, and he's going to talk more both about the difference between the UK and Malaysia and my favorite development of the moment, Millbrook Park. Thank you very much. And then at the end, as I said, we'll be both back to answer questions. So please, I can see a few questions already come in. So please do keep asking questions through the Q&A function. Thank you very much. Melvin?
Thank you, Mark. Thank you. Okay, so I'm Melvin. For many of y'all who have known me, or some of y'all have just got to know me, I'm the country manager of Malaysia. We sit here in Plaza Damas, and we assist about 300 landlords today to acquire, buy, sell, let, manage their properties in London. And we are a one-stop shop. We do the tax, we do the furnishing, we do the acquisition, we do the sale, we do the rents. So today I'm going to talk about the differences between KL and London. There are many first-timers here whom we have spoken to. I'm sure Jay and Michelle has called you all with regards, and some of you all would like to know what's the differences between KL versus London. And a lot of people have this misconception that London is pretty pricey. Yes, it is pricey if you go into zone 1, but we have some sweet spots here for you, which I'm going to share with you shortly today. First and foremost, what is the difference between KL and London? Of course, it's a big difference, I would say, but London has always been seen as a safe haven for many Malaysians or the ASEAN countries or the Commonwealth countries, the population or people to put their investments and wealth in. And I'm going to share with you the reasons and the differences between KL and London. Of course, London today, for many of y'all who do not know, is one of the top European tech hubs. London today hires more people than the Silicon Valley in terms of tech hubs. And last year alone, there are more than 30 IPOs worth about £4 billion in London. So if you were to buy something in zone 3, zone 4 today, your tenant most likely would be from the tech sector, from the research sector, from the data analytics sector. So we are going to 5G. And as you can see in the slides below, London is second to San Francisco in terms of tech investment. So that's point number 1. Going into the 5G, going into the future, going to AI, London is the city. Not New York, not Berlin, not Stockholm, not Paris, London, and of course then San Francisco. Next slide, please, Nikhil. And of course, point number 2 is that London has been an extremely resilient market. As you know, this past 2 years, we were hit by COVID, but London was the very first few cities that inoculated or vaccinated their population. They have opened up, they have given you the NHS, they have vaccinated, and of course, then the European Cup happened, which they went into the finals, but sadly did not win. But as you can see, the GDP has increased by 4.8%. The floodgates have opened, students have gone back, international travelers have gone back. My friends are holidaying there. I have friends there holidaying in Malta. So that has definitely revived the economy. So we're looking at 4.8 GDP and a rebound of the economy. Next slide, please, Nikhil. And of course, looking at the property market, and I'll spend a little bit of time on this graph, is because as a company today, in terms of the data and the experiences that we have, I personally have about 14 parents texting me last month, asking me, can they find a place for their children? Can they find a place for their children? There's absolutely no stock. The 300 landlords that we are renting out have letted out. It has been completely letted out. We interestingly enough, completed a few units in Millbrook, which is the development or the area that we are going to showcase afterwards. It was rented out within a week. And if you look at this graph, and of course, 2008, you have the GFC, which dipped, and prices have gone up, and then you had Brexit. But ultimately, if you look at the past 2 years, the prices have tapered. But once the vaccination occurred, the market reopened, and of course, with the stamp duty benefits that the government gave, or the stamp duty holiday that the government gave, the markets went into boom again. So, and then of course, not to mention, you have the Hong Kongers, which are coming now, 3 million BNO passports, and they are saying that these are new migrants that the UK have never experienced before, because these are migrants with money, and they come to buy, they come to invest, they come to contribute back into the local community. Next slide, please. So that's point number 2, a very resilient market. And of course, you have the education hub, which we all know London is now still #1 in terms of students going in. Floodgates have opened. I was just speaking to Mark earlier, and we're doing a comparison on how many students were there last year and this year, or between 2019. Interestingly enough, I think we have 5 times more the amount of students coming in, and that's why we have parents calling us, asking us for a place for their children to stay. And properties that are completed, we sold, we took the keys, we furnished, have been letted out within a week or within 16 days average on market. So that has been very encouraging for us. We actually need more stocks. So if your property is not letted out or is having an issue being letted out now, do come to us, do speak to us, because we really, really need more stocks. Next slide, please. And of course, being a financial hub, London is still, it was #1. Of course, New York took over, and now London is #2. But having said that, it has not, in terms of resilience and all that, in terms of the economy, it is still strong, and the global finances are still there. And a lot of people are still looking to London as a place or a financial center or an investment hub. Next slide, please. And I'd like to touch a little bit on this because there's something called the Global Talent Visa now, and that has sort of remedied the, a lot of people say that Brexit talents are going to leave, they're going to live. But of course, the British colonizing half the world, they are smart, and they've created something called a Global Talent Visa, where you come, if you meet the criteria of tech, software engineers, if you look at the slides here, business development, sales, product management, data scientists, these are all the applicants that are going in. You get to work for 5 years, and then you become naturally settled. So this is a counter move against the Brexit event. And we are seeing this happening, and this is very real because, like I said, most of the tenants we have fall into this sector of what we call the GTV. So comparing the 2 cities between KL and London, what the difference is, of course, #1 being a global financial center, the ability to attract talent, being a extremely central financial hub, yeah, and of course an education hub, and people are flooding in to London also because, as you know, the second education hub nearest to Malaysia was Australia. Australia remains closed. No one can come in. And of course, their foreign policies are not that friendly with the Chinese. So now we are seeing the Chinese students, especially our Chinese desks, I think their phones are exploding. Yeah, so we are seeing a lot more Chinese students going into London now, primarily because of the push factor, because Australia's borders remain closed till today. And that is a boost to London. That is a boost to London property investors. Next slide, please. And of course, we have a shortage of supply. Comparing to KL, as we know, there's a lot of glut of properties. Primarily, if you are buying or have bought an apartment here, you might find it a bit hard to rent out. And even the policies in Malaysia, where the stamp duty benefits are given, or the HOC, it's only given to the developer's stock. So to me, that is not very fair because that is just helping the developer. Whereas the UK or London, the stamp duty benefit was given to everyone, where it is a secondary subsale or an off the plan or a brand new property. The extension of the stamp duty benefits was given to all. And of course, this has hyped the property price. Again, everyone that was waiting for a property crash to happen are now seeing the reverse of it, because now you're seeing the property price gradually improving. And of course, the lack of stocks is creating a pent-up demand in terms of rental. And this is the amount of new stock that London needs in terms of 52,000 new homes. Yeah, and of course, unlike London or unlike KL, where we have our GLC's builder, most of London builders are private enterprises like Bharat, the developer, and all that. So they don't have that massive scale that they can scale so fast. And of course, stringent council planning and approvals. Next slide, please. And again, I'd like to touch on this, the rental demand. 16 days average on market, which is our stock or the units that we have. And our data shows that a 57.2 increase in domestic inquiries and 18% increase from overseas applicants to rent from July, August 2021. That is when London opened up. That is when the vaccination hit its peak and the market started to open up. And of course, tenants all over the world started coming in back again. And the data of the one in red is saying or just showing you that there are less and less stocks coming onto the market. If you see Q2 2021, there was 73,000. Q3 2021 to date, there's 64,000 coming onto the market. So we have actually less and less stocks. And this is true because we have nothing to rent. I mean, we are running out of stocks to rent here in Benham and Reeves as well. Next slide, please. And of course, the strength of the currency, it went up to about 5.9 to the ringgit, £1. Today it has dropped to about 5.68, and I think it will remain steady also because triggered by the London was having a little bit of problems with the energy or petrol. And of course, now they have a little bit of shortage of workers, but they are saying salary is going up. Salary or wages is usually tied to rent. If wages go up or salary goes up, rents usually follow suit. So yeah, it's about 5.68. Investing, you're hedging against the ringgit. If the price capital gains increase, the pound increase, that's when you get a double bonus on your property. Next slide, please. Okay, and for London properties, for all those of you who have not bought or are thinking to buy, in KL, we do our loan first, we pay the price, and we pay in, the loan will pay or draw down in a staggered manner. So even while the property is constructing, you are already paying your interest. That means you are actually funding the developers using your own money to build the property for you. Whereas in London, you pay a 10% deposit or a 20% deposit, and then you wait. If the property takes 2 years, you wait, you pay nothing in between. And at completion, the day where you take your keys, the day where you draw down your loan, and the day where you pay your stamp duty, on the completion date, let's just say 2 years later, you pay off everything, you pay down your loan, you collect your keys, you can rent it out immediately, and your loan interest only starts off then or kick off then. So why is it good is that you pay nothing in between and you can rent it out quickly, and the rent then covers your loan installment. So this has worked out very good in terms of people who like to use buy to let mortgages or the rent to cover their own loan repayments. And of course, you have financing in Malaysia. Many people do not know Maybank CIMB provides the rent. In terms of the rental or tenancy agreements, it's very well regulated. Landlords are very well protected. I always say in Malaysia, you only have the Contract Act to protect you as a landlord or a tenant. Everything goes with the contract. If you don't have a strong lawyer to draft a tenancy contract for you, then by all means you are at the tenant's mercy. Whereas the UK, you have proper Tenancy and Landlord Act enacted in or renewed in 1985. Stringent checks, you have the background checks, you have the passport or right to rent checks done on the tenant as well. So everything is done proper and above board. Next slide, please. And of course, next is why London and why Outer London now, or why we are showcasing this development in Mill Hill today, is because a lot of people, we get a lot of calls. You have this idea that you want to invest in Central London, but you might only have a budget of 400,000-500,000. It's very difficult. And when you come to us and say, Melvin, I want something in Central London, but I only have 400,000-500,000, I am inclined to say that it's pretty much impossible, because a one bedroom in Central London is now about 600,000-700,000 pounds. But if you are thinking, I have this pot of money, I have about 20%, 30% of 400,000 pounds, and I want to put it somewhere because the fixed deposit is now a little bit, the rates are a little bit lower, then look at developments at the peripheral area in which we would advise if you're looking for yields, because when you are entering at a lower price point, your yield is higher. And the demand post-pandemic has also changed. Tenants or individuals or locals are looking for bigger spaces, outdoor areas, parks, high Wi-Fi speed, because many people are working from home and they don't mind having a bigger space like a 2-bed 2-bath vis-a-vis a 1-bed 1-bath, and because they can turn one unit into a office as well. And comparing this with Zone 1 prices, you will get a higher yield of between 4 to 5%. And if you look at the data here again, and we all run through data, is that the $1 million suburbs, the 10 postcodes that have joined the 1 million property club, includes Hackney, Hendon, Hornsey, Vauxhall. These are all peripheral areas that property prices have gradually increased over the years. I am very lucky because I bought a property at Hornsey in 2019. So I'm very happy. This is one of the suburbs. If you can see, Hornsey is number 8. Mill Hill that we are showing case today is number 6 in terms of increment, in terms of capital gain. Next slide, please. Okay, so the Mill Hill area, now I'm going to talk a little bit about the development that we are showcasing. The Mill Hill area, if I were to compare to KL, it'll be like Bangsa. Okay, everyone knows Bangsa, even Mark knows Bangsa. It's Mark's favorite place to be when he comes to KL.
Yeah. I do love Bangsa.
and you have large houses there, and it's a very quaint area, and it has a lot of good schools. A lot of our colleagues have gone to the Mill Hill area, Mill Hill schools. It is picturesque, it is scenic. So you're surrounded by $1 million homes, but then you don't pay $1 million prices. Next slide, please, Nikhil. You have properties or apartments that are ranging about, these are just comparison of what is being put in Rightmove, Zoopla, and all that, the sub-sale market. So 650, 2-bed 2-bath, 600,000, 850,000, 2-bed 2-baths. These are on the sub-sale market. Next slide, please, Nikhil. Let's see what Bharat is offering shortly in terms of pricing. Also, sorry, the rent that we can achieve for 1-bed 1-bath before I go to the property prices is 1,500 a month. We actually achieve 1,550 a month for someone in Millbrook whom we just collected the keys, furnished and rented out within a week or less than a week. 2 beds are at about 1,900 a month. So your yields are actually between 4 to 5%. The person that completed in this Millbrook property, she was looking for property for 5 years, never bought anything, came to us, said that what is the best place, what can I get the best yield. We did the research, we did everything for her. We sold her the property, we got her the best discount, we furnished it within less than a week, and we rented it out less than a week. And I'm sure she's happy now if she's watching today. Yeah, I don't want to name names, but I hope that you can share your experience with your friends as well. Next slide, please. So again, if you can have a look at this Millbrook area, it's in zone 4, okay? It's in zone 4. And if you look at the Mill Hill East Station, it's just right at the development's doorstep. You are right next to a golf course and beautiful reserve and all the excellent schools. Down the road, you have Virgin Active with a gym, Waitrose, which is a supermarket, all and retails all within walking distance. There's also a grocer on site and cafes and retails on site. So in an 83 acres master plan regentrification, right? Bharat is one of the main developers there. New residential, everything is new built, okay? But you are surrounded, look at this. And you're surrounded by greenery. If you want to play golf, you can go to the Finchley Golf Course. If you want to walk by the nature, you can walk by the nature. And of course, if you want to go to the city, it's about 20 minutes tube ride. You hop on the tube, right in front of your doorstep, you go to the city and you're back. It's on the Northern Line, okay? And there are about 12 outstanding good Ofsted rating schools in this area. 12 amazing schools. And anyone who has been to London, stayed in London, you will know the schools in Mill Hill. They are very reputable. And this is where the locals like to be. These are where tenants locally like to be in, yeah? And an amazing thing about this development is that all units come with a car park. Now, I can share with you that a car park in London will cost, in central London, will cost anywhere between £75,000 to another £150,000. So this development, all units come with a car park. Next slide, please, Nikhil. Okay, so I've touched on this. These are the schools and the area and the Virgin Active Health Club, the golf course. Next slide, please. Yeah, and if you can see the Northern Line, the black line, Millbrook, which is stated there on the Mill Hill East Station. Northern Line is actually nearer cutting to central London compared to you coming from east or west. There's less stop, it's nearer to also King's Cross, where all the tech and IT hubs or companies are located at. There's a big regentrification happening in Camden, Houston, and King's Cross area. So all these people working in the King's Cross Basin will form your tenant as well, because they get the best of country living, village living, and they can go to work within 20 minutes in the tube. So that's why it's rented out so quickly within a week. Next slide, please. And a little bit about Millbrook Park, but this is definitely Millbrook for Bharat. Yeah, underground, you can see the underground tube. This is a real photo which I'm showing you, which we have just completed for some of our clients, and it's a real photo. It's not a CGI. And look at how near the underground is within the space of the apartments. You can literally walk down, go to the tube, and go to the city straight. All right, and it's that near. Next slide, please. All right, and these are all the actual images. It's low density, low rise, not high rise. So when it's low density, low rise, it attracts a lot more owner occupiers. There's a lot more care to the property. And when you resell as well, it appeals to a lot more owner occupiers. Next slide, please. All right, so the development or the block that we are launching today are King Cup Apartments and Meadow Apartments. They are 999 years lease, 355 apartments and 10 houses in total. And you have King Cup already completing now. So if you want something quick, completing quick, generating income quick, you can go for the King Cup block. Or if you need a little bit more time, you can go for the Meadow block, where it's completing in April, May 2022. Now, the good thing about Bharat developments are that there are no ground rents now. It's called peppercorn. So you only pay a minimum service charge. It's straightforward, and it's not much because there's not much facilities. They don't put in so many gimmicks. It's straightforward. And that's when you get the return on your yield, because if you own a property, you need to hold and maintain it as well. Yeah. Next slide, please. So I'm just doing a quick run through with you. I can send you this, so not to worry if you miss it out. This is a 1-bedroom priced at £429,000. You can get an annual rent at £18,000. If you look at column D, D for donkey, if you go for a buy-to-let loan, or what we call HSBC expat, or through the mortgage brokers or UK-based loan, yeah, you can get a interest rate at 2.89%, yeah, and your repayment monthly is only at £723, while your estimated monthly rent is about £1,500. So you are getting a return on cash from your rent of about £800. This is a buy-to-let loan. Buy-to-let loans are interest-only loans, so you get a lot more cash back. That is one thing that you can go for. If you look at column B for Britain, yeah, this is for owner-occupiers who wants to pay the P plus I, principal plus interest. So your repayment is about 1,361. And if you want to pay P plus I and rent it out as well, yeah, 1,500 less £1,361, you still get £200 in terms of cash back to you. And this can be used to service the property. So what I'm saying is that the property can be self-servicing if you invest in a 1-bedroom. Next, a 2-bedroom. Can we look at it? Thank you. Yeah, and similar to a 2-bedroom, if you look at column D, a buy-to-let loan. And if you remember just now, I saw show you the prices in Zoopla and all that. 2 beds are being sold at £650,000, £700, £800,000. Here, a 2-bed is at £555,000. Of course, this is the asking price. We can negotiate on behalf of you with Bharat to get you the best deal or the best prices. And again, the data speaks for itself. Like I said, I always use data to compare and the real life situations or what we achieve, because I will treat this as my own purchase as well. So if you're getting 1,900 in blue, column D, donkey, for a 2-bed, 2-bath, your repayment for an interest-only loan at 2.89% is £900. So you get about £1,000 back in cash for your yield, or to service the property, or if you want to use it when you go to London. Ultimately, that's up to you. If column B for boy, if you were to pay the P plus I portion, is about 1,761 in pounds in terms of repayment. This is based on a loan to value ratio of 70%, meaning you pay 30% down and you take a 70% loan. Yeah. Next, Nikhil, please. Okay, and last but not least, I'm just putting in my personal unit, which I am achieving. So if you think you have the 30% to put down of £400,000 or £500,000, this is what I did. My property price was £345,000. I paid a down payment of 30%. I couldn't pay more because I'm merely a salary man. So I took a maximum loan of 70%. And there's two options for me. And I'll share with you which option I took. If I gone for the UK buy-to-let loan interest-only option, my rent would have been 1,250. My repayment would have been £600. My gross surplus monthly would have been £647. So I have about £40 extra to keep there to service my maintenance, my service charges, and all that, and an estimated annual gross surplus of £7,000. So this takes care of my service charge, my ground rent, anything repairs, pays for my furniture, everything is done. But I actually opted for the Malaysian loan, which is a reason why I took it is also because my rent is in UK pounds, but I'm servicing the loan in Malaysian ringgit. So as the pounds increase, I pay lesser as well because the ringgit becomes smaller. So this would be a Malaysian ringgit loan at 3.7%. My monthly servicing is about, my monthly rent is about 6,750 ringgit. Yeah, and my initial repayment to the bank is about 6,000 ringgit. I keep 700 ringgit in the pocket, and annually I get a annual surplus of 8,000 ringgit. So this helps me with my service charges and all that as well. No doubt I need to top up a little bit. So for Malaysians, there are options. So we can cater or curate the loan packages and advise you. We will always give you this breakdown or this repayment options, and you can then look at it properly and invest based on the information or the real-time data that we provide because of our 20 over offices in London. Next slide, please. So before we go for the Q&A, if you'd like to speak to us on Millbrook Park, reserve a unit before 31st October to enjoy some contribution, stamp duty contribution. And I think Mark has also touched a little bit about the incentive stand. Everything is negotiable. Just pick up the phone or email us shortly and we can speak. Yeah, and that's it for me. I think we will go to the Q&A, but the next slide will show you how to get in touch with us, webinar at Benham's. If you have any questions or anything with regards to Millbrook Park, call us, text us, and speak to us. Thank you.
Well done, Melvin. Thank you very much. Sounds very exciting. I wish I'd bought in Clarendon. I bought elsewhere this year, actually. So even though we're working in the market, it just shows confidence. Melvin bought in London last year. I bought in London this year. I'm completing next couple of months. So, there's lots of good demand. But anyway, thank you very much. I hope you found that interesting. If there are any questions on the development, then feel free to ask now, or you can ask Melvin. His email's on here. Someone asked if they can have a copy of the slides. Again, if you want that, ring Melvin up or email him and he'll send them to you. But let's start on some quite good questions, Melvin. So the first one I've got here is, and I think you did talk about it a little bit, and maybe we can elaborate a bit further, is I'm based in KL. I'm wondering how easy it is, or how can I get a loan, and what are the rates like? So do you want to take that?
Yeah, so for local Malaysian banks, they loan up to zone 3. So the rates are about 3.6, 3.7%, up to a loan to value ratio of 70%. So it's pretty easy. It's just like getting a Malaysian loan. You just need to show that your pay slips, your employees' provident fund, or any extra cash you have. As you know, banks only like to loan to people who have money. So the more money you show, the better it is. For the UK loans, we have mortgage brokers that will do the loan shopping for you. We also have HSBC Expat, which majority of our buyers have been successful. Some gotten good rates, or if you're a HSBC Premier client already, HSBC Expat loans almost everywhere in the UK, zone 1 up to zone 4, zone 5, or even if you're buying in Reading or Slough or anywhere else, they do loan as long as it's in the UK. And their rates are between 2.5 to 2.89 with a loan to value ratio of about 70%.
Yeah, it's very good, and I think the rates are pretty good. As I said, they're on the floor at the moment, and you can get good rates, and that's also rates whether it's in your personal name or in a company name. You can get these kind of rates, so that's interesting. It's good to know. One good interesting question here is this was interesting. This is we can both talk about this. Is my property is empty and my agent says it's hard to let. Is it really that difficult to find tenants at this time? Now that's a good question, because I did talk about how strong the rental market is, and it's genuinely, and I'm going to message you afterwards, by the way, because if your agent is struggling, there must be something wrong, because there's absolutely no property. You could give me any property from the cupboard all the way up to a large house. You could even give me a storage unit, and I think we would struggle not to let it. The market is the busiest I have ever seen. We're running on 83 inquiries for every single available property at the moment. It is unprecedented. I love using that word because it is mad. And so if your property is not renting, or you've got it coming on the market, or it's coming up for renewal, make sure you speak to us and we can tell you what rents we can get. Most renewals are going up through the roof. You're seeing big increases, and especially if they've been in there for a few years, or they got a big discount last year under the COVID, lots of people complain. So it's very good. Melvin, you're finding the same, right? None of our clients are struggling.
Yes, in fact, I'd like to touch a little bit, because during the COVID period last year, out of the 300 properties that we had, we only had 12 units unletted. But of course, now there's no units unletted. And that tells you, comparing KL versus London in terms of the vacancy rates, in terms of the strength of the rental and the people paying rent. Our landlords were all protected, and we made sure that they were all receiving rents. Some discounts were negotiated, but majority, they were all safe and sound in terms of receiving rents.
Very good. Thanks, Melvin. So it is busy. If you've got a property, as I said, please get in touch with us. Even if it's completed, it's not completed yet and it's coming up, or the tenant's not leaving until November or December, get in touch. We've already done our first December let, and we're only in October. It's unprecedented, as I said, it's my favorite word. So another question we've got here is, can you please elaborate on inheritance tax? So, I mean, Melvin, do you want to take that and talk a little bit about inheritance tax for Malaysians?
Well, there are inheritance tax in the UK, but if you are buying 1-2 properties, that's not a big worry, because per name, you have a threshold of about £325,000, non-inheritance taxable. So if you buy in 2 names, it'll be £750,000 non-inheritance taxable threshold. So if you're buying something at 555 or 650, you're still safe. But having said that, the inheritance tax portion is on the cash portion or the equity portion that you have paid up in cash. So the loan portion does not count. So one way to mitigate is as well as leverage a bit. Don't pay everything full in cash. Yeah. And also you can add more names, like I said, to get a little bit more threshold. And there's also the 7-year test. If you pass it on and live on for 7 years, then you can mitigate the inheritance tax. It's best to speak with solicitors, but usually, personally, this is what I do as well. So if you're investing in 1-2 units, so there's usually no worry on inheritance tax. Yeah, they used to buy it via a company vehicle, but now they also have enveloped that inheritance tax into the company vehicle. So unless you're buying like 10, 20, 30, yeah, then there is not much worry. Yeah.
But I agree with Melvin. It's manageable. I mean, it's worse for a British taxpayer because we pay 40% on all our assets. So any properties we have to pay tax on. As Melvin said, it's manageable. Take out as much finance as you can. Do it interest only. Don't pay the loan down. Add your wife, your kids on. Even if your kids are under 18, you wait till they hit 18 and then you add them on as joint owners. It's all possibly manageable. And if it's going to be a stage, it's £325,000 of the net value per person. If it's going to be, if you're thinking it's going to grow and you're going to get more of that, then it's good to speak to an accountant to make sure that you structure it in the best possible way. So here's a good question. What's the best time to buy a property, Melvin? When do you think is the best time? Right now? No.
I think the best time will be always, in hindsight, every time is, you can look at the best time, but I would say when you're ready, you have the right amount of deposits and funds to cover everything. You don't have control over the legislation. You don't have control over things like whether Brexit will happen or COVID will happen. So I think if you follow the data, I don't say the right time, follow the right data and follow the right advice and invest with the right agents, because yeah, when the property is completed, it's not just buying it. You need to service it. You need to make it work for you. You need to monetize it, and that's why it's very important. And I could not stress this enough. So rather than right time, I would say the right data, the right information, the right comparisons, the right agent.
I think that's really good. I mean, what I always say when people ask me that question is, now the best time to buy? Honestly, the best time to buy is when you're ready. Let's be honest, if I could tell you when the bottom of the market is, honestly tell you when the bottom of the market is, and honestly tell you when the top of the market is, I wouldn't need to work because I'd have so many billions of pounds in the bank. But we look back historically, and property has always been on a cycle. Yes, it drops a little bit and goes up, but the best time is when you're ready, when you have the funds ready, when you're really ready to commit, and you're able to do your research. I think that is the time to invest. Over the long term, property outperforms all other asset class. It wasn't in our talk today, but we often do that. We often talk about that, and we can share that with you. It's such a great asset class, which is why London is a place people come to, because it's very safe and you get a good income. So buy when the best time. Another question, just on loans. What's the maximum? Melvin, do you know what the maximum age for a term loan is for Malaysians?
Malaysians, I think, because the loans are usually between 20 to 30 years, a stretch. So I think, yeah, so about 60 years old, a maximum age, 65 years, that would be your maximum age. But you can always, the Malaysian loan, you can always put in someone younger. Yeah, like if you would like to buy and you're older, then put in your son's name. Your son can leverage on the age while you pay the deposit, but both of you can be inside the loan. So that helps. Yeah.
Brilliant. Brilliant. Thank you. Another question just come in, and this is quite interesting. I think it's on the back of us talking about inheritance taxes. My child is studying in the UK under the student visa. Can I put my child's name in the property purchase? Will this breach the student visa compliance? Absolutely, you can put your child's name on as an owner of a property. That doesn't breach anything to do with visas. Remember, the question that we get asked quite a lot is, if I buy a property in London, can I get residency here and become a citizen? Sadly, we are not, the British government are not desperate like the Portuguese are and other people around the world, and St. Nevis and places like that. You do not get residency by buying a property. Equally, if you buy a property, you don't have to come here every year. There's no rules around anything like that. And in terms of ownership, the only thing you have to do if they're a student is that they're over 18. If they're over 18, anybody can be the name on a property. My daughter became 18 in September last year, and I've transferred a property that I held on trust for her into her own name so that she gets all the income and on her tax rate, which is much better for me. And she pays the mortgage out of the rent, which is again much more tax efficient. So it's a good question. And the answer is she can absolutely be an owner of a property. And they don't, whether they're here or anywhere, you can have them owning. Another good question is, should I buy new or second hand? Now, everybody has their own view on this, but Melvin, you asked from what do you think your Malaysian clients think?
I think there are pros and cons for both, actually. If you buy new, you can, or off the plan, you usually put a deposit first, so you have time to prepare your cash flow and stagger out your repayment. So like me, I paid in my deposit of about 10-20%, and over 2 years, I collected my money to pay for the threshold of the stamp duties and the remaining amount that I need to pay. Then I had the loan. But if you want something immediate, you want something quick, you want something to monetize or to transfer your FD immediately into an asset that can make more money compared to your FD, then yes, a completed unit or a sub-sale unit would do absolutely fine. So it's entirely up to you. At times, you can get sub-sale units at very, very good price or distressed sales, and we help our customers with that as well successfully. Yeah. One thing good about buying off the plan is that, of course, you have the developer's warranty for 2 years or up to 2 years. Then there's no need to worry for the first 2 years. Yeah. So it's a mix and match on what would you like. Yeah. Yeah.
I think that's one of the key things is if you buy brand new off plan, you can do it in the future, and you can be involved with selecting color schemes and you know, most developers like at Millbrook Park, they have different color schemes, so you can be involved in choosing that and personalizing the unit. You can still personalize a second hand, but you're paying for it. And the second thing is the warranty is the most important. The first 2 years, the fact they fix everything that might go wrong. Whereas if you buy second hand, there will be more maintenance. There's going to be more maintenance. And unfortunately, you know, by the nature of London property, a lot of our properties are not new build, a lot of them are old. And so they do end up coming with maintenance. So that's the big consideration with buying. You know, people tend to buy secondhand if they want to move in immediately, i.e. something that's completed because there's someone going to use it immediately. Another question, and I think we're going to keep everybody for another 2-3 minutes and just try to bash through a couple of other questions. One question that someone asked is, do I need to come to London to buy a property? So quick answer to that is no, you don't. Lawyers handle everything over email and by speaking to you and Zoom. You have to get your documents certified, but you don't ever have to come. And that is not a reason that people have not been buying London property. People want to come and see it. but you don't have to. So if you're buying something off plan, like at Millbrook Park, you don't need to come. Everything can be done for you, and we can send you videos and show you floor plans and show everything to you, so you don't need to come. I think another question is how much is stamp duty? Melvin, do you want to take that? Because someone asked how much is the stamp duty, let's say on the Millbrook Park unit that you suggested.
It would be on a staggered basis. I think at about £500,000 now, you are looking at about £500,000 now, you're looking at easily above about a 5% stamp duty. And of course, now the UK has put in a 2% foreign levy on the stamp duty. So it will be about 5 plus 2, about 7%. But having said that, if you book something before 31st October, there's always room for negotiation on the stamp duty contribution. Yeah.
That's great. This is a good time to take advantage of it. Developers are keen to get things over the line. So I think there's a bit of wiggle room there to save you. But it's about 5% based on what Melvin said for that kind of property. And the last question I think I was going to ask is, what is the resales market like for London property? Where do we predict it's going to go over the next 12 months? And what's it like at the moment? Melvin, you've got quite a few clients who are looking to sell. So what were they?
I think, yeah, you're not going to get, the market is the market. I think you have to do your research and price it accordingly to the market. Some areas are seeing high demand, some areas are seeing not so high demand. What we are seeing that landlords that have successfully sold their properties are landlords that have priced accordingly to the market and not one or a price that suits them, or they want an exorbitant increment. So again, in the UK, it's very transparent. You hop onto Zoopla, it will show you the analysis of how much the market is demanding now. So buyers are aware of the market rates. So yeah. But
I think prices have moved up, as I talked about. Prices have moved up, and we're not. I certainly want to predict it. We as a company are not predicting 10-15% increase over the next year. We think it's going to be about 5%, so it'll settle down, which is easily manageable. We've been through a big boom because of working from home, people driving for more space, and I think that's settling down now. And obviously the other factors we talked about, stamp duty holiday and Help to Buy, which are being slowly phased out. So that means the market will return to normality, and we're predicting 5% capital growth. But the resales market is pretty active, depending where the unit is, what price it is. We've got very strong demand from buyers who want to move into something immediately. So if you have something and you're thinking about selling it, get in touch, because we can definitely do your evaluation. You might be pleasantly surprised how much you can get at the moment. And we've run over the hour, so thank you very much, Melvin, and thank you everybody for joining. I'm sorry if there's a couple of questions we didn't get around to answering, and if you want to email those through to Melvin, it's melvin@benhams.com, or myself, it's mark@benhams.com. We'd love to help you, and if there are any other questions, please do get in touch, and have a lovely evening. Thank you very much.
Thank you. Bye-bye.
Thank you.